It's time to wrap up housing numbers for January 2021 in Southern California, and we can't wait to share with you what we found. Hey there, Christian Walsh, Coldwell Banker Wire Associates. We're real estate brokers based in Southern California who help buyers and sellers and tenants and landlords here in California and beyond. And we're wrapping up the numbers for January 2021, and we are going to answer some big questions. And that includes the big question on everybody's mind: should you buy in 2021? We're going to look at the data and we see a little hint of what things are going to look like for the spring buying season, and we can't wait to show you that. We're also going to talk about foreclosures. Are we starting to catch up yet? We're going to cover multifamily sales numbers, and we're going to wrap it up by sharing exactly what you need to be following in 2021. It's quite a list. There's a lot to track. By the way, if you're looking for the most up-to-date data in Southern California real estate, this is the channel you need to subscribe to. So if you're ready to take a look at the housing numbers, hit that like button and let's get started. And away we go. It's time to dive back into the data like we all love to do. So first, we're going to start off with an Orange County housing market update. But let me get out of the way. You can't see what's going on if my head's in the way. All right, so a quick reminder of what we have here. So we have month over month data. So month over month is what you see over here. So we have December versus January, and it's important to see that trend to see where things are going month over month. Then we have the trend, this is this year, so this is the end of January, and then going back through the other months, we go back 5 years. So we've got the year over year trends as well, so we can see how Januaries look as compared to other Januaries, and we can see how January looks as compared to December. So we got short trends, long trends, and everything in between. So that's your quick reminder on how this works. And here we go to dive into the data. So Orange County in January was an interesting month yet again. You can see the numbers are down for sales month over month from December to January in Orange County. A big drop, but that's actually old news. By the time they close in January, these are previous escrows. So that's not as important to me, because what's important to me is we got to figure out what the heck the market is going to do in 2021. Which way is it going to head? And we've got some hints here in the short term that'll be interesting. You can see those sales year over year, of course, are way up. We saw that whole cycle shifted. Now, escrows are up dramatically since December. That's pretty typical most years because December people are doing other things. But you can see that year over year, when we look back in years past, that we are up significantly, especially compared to some years like 2019. New listings thankfully are up. We have a big increase from December to January in listings, as you can see, but they're not up year over year. So here's the danger zone. This is the hint, and we're going to see this in other markets in Southern California. This is the danger. We have escrows, we have properties going under contract at record levels, but we have listings coming at not record levels. So this is a recipe for disaster, for more multiple offers, and it's a tough time out there. So for buyers, sellers, you're loving it. I don't blame you. My listings, we get plenty of offers. Even if you're way out of whack on pricing, you get multiple offers. And if you don't, then you're probably priced $1 million over. You got to figure that one out. But that is the tale of what's going on now. So what does this hint at? And we'll see this again in other markets. This is basically showing us that this spring buying season, as it's starting now, is going to be very difficult for buyers. And the Los Angeles real estate market update, how does it compare? Very similar. So we have escrows that are way up. Listings, again, increased month over month as compared to December, but not enough. So this is going to spell trouble when we have record high escrows and record low new listings. We got multiple offer battles going on in Los Angeles as well. And let's see what Riverside says. And here we have your Riverside real estate market update. And again, a similar tale of lots of properties going into escrow and record low listings. So listings are up month over month, which is good news, as is typical every year, but nowhere near enough. I mean, you can see we're definitely down about 1,000 listings in Riverside County, so more battles for single family homes in Riverside, just like Orange County and LA. Now it's time for a multifamily real estate market update. So Orange County, it's been crazy. My multifamily listings at Huntington Beach Fourplex, we had 25 offers. Seller accepted one, and we still got more offers. I think we're at over 28 offers now. It's absolutely crazy, and you can see what happened. In January, we had just an absolute record number of escrows, almost double the number of typical escrows in a January. And listings are low, and that's causing multiple offers. The inventory was basically sucked up. So that's what we're seeing in Orange County. So Orange County multifamily is definitely moving at a very quick pace. There is still SB 91. There are still eviction moratoria, but Orange County is a little less strict when it comes to eviction moratoria than, for example, LA, and I'll show you those numbers right now. It's a different tale in LA. And Los Angeles multifamily real estate, you can see that it's not as dramatic. The number of buildings that have gone under contract, it's up. It's not a record high, and it's definitely nowhere near double that we saw in Orange County. And then listings, it looks like a pretty standard year. In fact, the 2021 January numbers look like pretty standard numbers. You couldn't necessarily pick these out as any different from any other year, albeit a little bit low. In LA, there's a more strict eviction moratorium than we have statewide, so this could be leading to lower level of sales in Los Angeles multifamily. Riverside County, there's not a whole lot of buildings trading, more similar to Orange County numbers as far as volume goes, and definitely nothing atypical. You have an increase in closings, but again, that's old news. Your buildings going under contract and your new listings coming are not exceptionally high. Now it's time for the foreclosure numbers for Orange County, and you can see that we are still way off. We are way down on our numbers, especially when you go back to busier years like 2011. We're working on getting some other data, 2010, 2009, so you can see the real comparison, the real high numbers. But the notice of default, way down. Notice of trustee sales down, and REO is way, way down. Reason being, notice of default is filed 120 days after a payment's missed, then 90 days after that's a notice of trustee sale, and then 21 days is the bank-owned sale. If you kind of unwind that or go backwards from those numbers, you'll see that it's right in the middle of the pandemic, and there weren't as many properties going into foreclosure. So they weren't starting the notice of default, then the notice of sale into the REO process, and you can see it reflected in these numbers. Basically, one went back to the bank in all of January in Orange County. It's also very evident in Los Angeles foreclosure data, and you can see it here. The big difference in REOs as compared to years past, dramatic difference. The notice of default are up a little bit, but still way below, particularly 2020, but similar to 2019 numbers. Still have some ground to catch up, particularly notice of trustee sale and the bank-owned REO side. San Diego foreclosure data, you can see here that actually it doesn't appear that any properties went back to the bank in January 2021. And same thing, the notices of default very low, notice of trustee sale very low. Seeing the same trend in San Diego. They have some catching up to do there. And Riverside, no surprise, same thing. So basically the foreclosures pretty much stopped during the pandemic, and it will take a little while to catch up. Here's the median home price update and our handy InfoSparks tool we like to use to show the 4 different counties, OC, LA, Riverside, and San Diego. We have the median home price charts, and you can see that we're still way up. So values peaked, and again, this is for single family townhomes and condos, and we're still at peaks. We're way at the top. They have dropped a little bit in LA, flattened off in Orange County. That's not unexpected. While we do have a lot of sales, we are at some point in time going to start to hit a ceiling of affordability So this is not surprising to see median home price that's peaking and plateauing. But here's what's interesting is when we look at when folks started missing payments. So there are some people that their total of 180 days plus 180 days, or 360 days of forbearance protection for their home mortgage is going to be ending. But here's what's interesting. If they started in April of 2020, you look at these numbers, we use Orange County for example, the median home price was $740,000 in April 2020. They right now are at $790,000. So there's an extra $50,000 that the median home price has gone up. So while folks were not able to make payments, their homes are still going up in value. The good news with this is it means equity, and that's equity that would allow them to sell the property and get out from underneath a home that they can no longer afford. So that's the good news. Unlike parts of 2008, 2009, 10, and the previous bust where values just kept dropping and it was like catching a falling knife, here values have continued to go up. So that's important to see. Don't forget our email subscribers are able to get this data and play with it and move it all around and take a look at the numbers closely. So make sure you subscribe to our email newsletter if that's something you'd like to do. There's a lot to watch for the real estate market in 2021, and we're going to be covering all of it on our channel. So make sure you subscribe if you haven't. But an important first point is the economic recovery is looking more and more like a K-shaped recovery, if you can see that. So what do we mean by a K-shaped recovery? What this means is that we have people that are continuing to do better and better. At the same time, we have people who are continuing to stay at the bottom and do worse and worse. And my real estate business is very, very evident to me that this is a K-shaped recovery. So at the bottom, we have landlords and tenants absolutely struggling to make ends meet. I have plenty tenants and landlords out there that have reached out for help, and we're doing what we can to assist them. Then on the other side of the K, we have those folks who are doing great. That's why we see the multiple offers, the bidding wars, the cash, people getting mortgages. All of these folks on this side of the K are doing very, very well. So we're going to continue to track this market. We need to go from the K and get it here and then get it here. We need everybody moving in the same direction. So that's going to be a very important thing to cover this year in 2021. Another big topic will be vaccinations. A big part of getting the economy back on track, obviously, is getting beyond COVID-19. The vaccinations, as they roll out, will both allow people to feel more confident to go out and then allow people to actually go out. So we're very hopeful that the vaccination rollout will continue to ramp up, and while it does, improve the economy. As it does improve the economy, what will happen with mortgage interest rates? So we're going to be watching this carefully. We know the Fed is going to keep the short-term rate very low, and we expect that mortgage interest rates will stay low. But as the economy improves, there will be pressure on rates, and rates will have to raise. Will the economy need more stimulus? So we are still feeling the effects, still running through the stimulus funds that were passed at the end of December. There is talk of another stimulus package being passed, so we will see what effect that has. There's a few things in there that dovetail into future points, and that is unemployment. So we have been carefully tracking unemployment numbers. Job creation is slowing. Unfortunately, that means new jobs aren't being added at a strong pace to the economy. Unemployment in many parts of the country is still way too high. Markets like Las Vegas that rely on hospitality, unemployment levels are very, very high. In the stimulus plan passed at the end of December, there was a $300 weekly bonus, the bump that was given. That will end in the middle of March. So that's one of the things that a new stimulus plan would potentially extend. So we'll be watching that carefully. Another important thing that was in the stimulus plan passed in December was $25 billion that was dedicated to help landlords catch up with tenants who haven't paid rent. So these funds are coming from the Treasury across the nation. The state of California was earmarked to receive $2.6 billion in those stimulus funds, And I've done some other content on that, and I'll keep this content coming. SB 91, which is an important bill we'll touch on in a little bit as well, that allocated $1.5 billion of that for a statewide fund to help landlords and tenants catch up on back rent. The other $1.1 billion went to large metropolitan areas, and that is rolling out, or it can be given back to the state for part of that other statewide fund. So that's an important piece that was in the last stimulus plan. There may be additional funds that are dedicated to this, and it will be necessary because there are billions and billions of dollars that landlords are owed because tenants have not been able to pay rent. SB 91 that I just mentioned, that created the statewide renter assistance program, also has stopped evictions due to non-payment of rent due to COVID-19. So AB 3088 expired at the end of January 2021, and SB 91 took over and extended to July 1st, 2021, the protections from evictions. In other states who don't have a local eviction moratorium, there's the CDC eviction moratorium that's helping to keep folks in their homes, and that is slated to expire end of March 2021. So there's some big things out there for folks. We may see an eviction wave in other states. It's unlikely we will in California because there is a chance, depending on where the market is in July 1st, there is a chance that SB 91 will be extended or a new bill put in place. We have done some videos if landlords absolutely can't hold on any longer and aren't interested in waiting for the statewide rental assistance funds. There are a few ways they can sell right now, even with the tenant not paying. We've been helping folks throughout California, helping them find agents who can help in other areas. For example, Palo Alto, Castro Valley, San Diego, Los Angeles. We help here locally in Orange County. So if you're a landlord that absolutely can't hold on any longer, make sure you reach out for help. Non-payment of mortgages obviously is another big part of what we're tracking. When will there be a foreclosure wave? If there will be a foreclosure wave. So there really doesn't look like anytime soon in 2021 any reason to believe we'll see a mass wave of foreclosures. But as you saw in the data, there is some catching up that needs to happen. And another important point, so forbearance for those who couldn't make their mortgage payments had 2 forbearance request periods of 180 days. So they could go ahead and do a 180-day request. If they needed additional time, another 180-day request. Well, guess what? We're coming up on the end of the forbearance plans, and we'll see if there's an extension. So of the 2.7 million mortgages in forbearance right now, about half of those mortgages will be exiting forbearance because of the expiration of forbearance in March, April, May, and June. So that's important to note that we will start to see folks coming out of forbearance that may not be able to pay. As we discussed in the median home price, those folks probably have equity. The other positive is mortgage forbearance may be extended and/or creative solutions that help keep people in their homes. Of course, it's important to keep it in perspective. During the previous bust, we had over 3 times as many mortgages being missed. We had over 10 million mortgages not being paid. So it's important to note that this is, while big numbers, this is still much lower than the previous bust. And inventory in Southern California, we do not expect any flood of homes to come anytime soon, whether it's traditional sales, new homes, or foreclosures. So the market's going to stay tight. We'll continue to track this. As we noted in the data we just ran through, it's looking like spring is going to be very tight for buyers, a great time for sellers. The ones who are going to have the toughest time are sellers who want to make a move into another home that they buy. It's going to be tough. We're going to do some content on how to make that happen, but it's tough to get both sides of the market. You can't have the seller's market and the buyer's market at the same time and same place. So there's some solutions around that, and we'll bring content. So thanks for tuning in. I know we ran through a lot of stuff in this video, but there's a lot to keep an eye on. We're definitely optimistic about 2021. We talked about it in our prognostications video. And we do think if you're considering buying that you should. We have some other content that will, of course, give you advice on how to make that happen. Don't forget to subscribe to our free weekly email newsletter. It comes out on Sundays where we go through content like this. We cover eviction regulations, foreclosure data, and a whole lot more. Make sure you subscribe. We have a link below to do that. This has been Christian Walsh, Coldwell Banker Wire Associates, and we appreciate you.